We have a classic gap and go on Caterpillar this morning after they announced earnings, after reporting better than expected earnings and revenue. However, they warned of a potential decline in sales and margins for the third quarter. However, let's get into this article from Reuters. Caterpillar's 2023 margin forecast, upbeat results, send shares to record highs. They said strong demand for heavy machinery from construction and mining industries is expected to drive full-year operating margins near the top end of its prior forecast, sending its shares to a record high. Company had forecasted an adjusted operating profit margin between 10 and 13% and 18 to 21% when it reported fourth quarter results. Now this is the big one. Demand for heavy equipment has been improving as the U.S. upgrades roads, railways, and other transportation infrastructure under the Biden administration's $1 trillion package that was approved by the Senate in 2021. In response, the company raised prices for its yellow machines, helping offset manufacturing costs while protecting profits. However, some investors were worried about slowing demand as dealer inventory rose in the first two quarters. Those concerns by saying that the company was very comfortable with the inventory that dealers were holding. Shock reaction should be positive as all metrics point to acceleration in underlying trends, demand trends. All right. So before we get into the analysis, one thing to note that the China reopening has been a 2-year delay. And they're about to put some stimulus to kind of kickstart their economy. Caterpillar is a great barometer of the global economy in itself and a good gauge of the stock market overall as they deal in construction of everything industrial related. All right, so let's start with the monthly chart, and you can see that we also have a gap and go on the monthly chart as it is the start of the new trading month of August. You don't typically see these type of gaps often and or not this wide, right? This is a roughly $8 gap on a Fortune 100 company. All right, so let's go down to the weekly chart. All right, and what I can see is that we have a rally in price, two basic candles and a rally out. So this is the level of interest. We're going to call that weekly buyers at the 255 level. So ideally, if price can pull back $25 or so, that's the ideal level to go long. When we go to the daily chart, like I said, you have this gap and go. Price has not looked back. This is going to be the best level to go long. Now we are coming off a great July. The U.S. indices rose roughly 3% minus the Russell 2000. We are off to a great year thus far. Stocks are up mid-teens to the high teens if you're looking at the NASDAQ, thanks to the Magnificent Seven. I say all that to say that a pullback is inevitable. August, you have the smart money on vacation. September is typically a indecision month. October, you usually have a sell-off. So this could be a great level to watch and hold to see if price can get here within the next couple of months. And then we should see a rally into the end of the year. And we could see Caterpillar hit $300. We'll see what happens. We got 5-6 more months before the end of the year is over. Again, the best level to go long Caterpillar if you're interested is the weekly buyers level at 255. Thanks for watching. Subscribe. Please like the video.